Hello everyone. Although Africa is often viewed as a single continent, its economic story is far from uniform. On one hand, the Maghreb nations, Tunisia, Libya, Morocco, and Algeria in North Africa, are carving pathways of industrial growth, infrastructure upgrades, and global trade integration, and they're achieving a relatively stronger economic performance. On the other hand, many sub-Saharan African countries in the rest of Africa remain trapped in cycles of raw commodity dependence, weak infrastructure, and fragile institutions. The result is a widening economic gap. One continent, two economic realities. The average GDP per capita in the Maghreb is $4,500, or roughly 3 times that of sub-Saharan Africa. Manufacturing contribution to GDP is over 15% in the Maghreb, but less than 10% in sub-Saharan Africa. Access to electricity is also virtually 100% in North Africa, whereas more than half of sub-Saharan Africa remains unserved. There are several structural, historical, and policy-related factors that explain this economic divide. First, Maghreb countries have had longer and deeper integration into global trade through centuries of Mediterranean trade and, more recently, colonial-era infrastructure designed for export. Sub-Saharan Africa economies, while rich in natural resources, had colonial trade systems which were focused on raw material exports with minimal value addition and little industrial base. Second, Maghreb nations generally have higher literacy rates, above 75%, and more developed technical and vocational training systems. Morocco and Tunisia produce large numbers of engineers and skilled workers, feeding into manufacturing and service industries. On the other hand, many sub-Saharan Africa countries still face low literacy rates, underfunded education systems, and skills gaps, resulting in significant dependence on foreign expertise for industrial projects. These skills mismatches really do hinder industrial growth. Third, after independence, Maghreb nations invested a lot in their transport, energy, and manufacturing infrastructure. For instance, Morocco actually has Africa's very first high-speed rail. Algeria has also built up an extensive network of oil and gas pipelines, such as the Trans-Mediterranean pipeline to Italy and Medgaz pipeline to Spain. Meanwhile, sub-Saharan Africa still faces some pretty serious infrastructure deficits. Things like limited electricity access, poor roads, and underdeveloped manufacturing facilities, which, unfortunately, limit productivity and drive up production costs. Fourth, the Maghreb has generally experienced longer periods of relative political stability and stronger central government control. Of course, there have been challenges, like Algeria's civil war in the 90s or the more recent unrest. But overall, institutions in Maghreb countries, though not perfect, are often more established. By contrast, Sub-Saharan Africa has seen a higher incidence of prolonged conflicts, civil wars, and significant political instability in many regions since independence. Governance and institutional capacity and regulatory efficiency tend to be weaker on average, which deters investment. 5. Maghreb countries have relatively more diversified economies. For example, Tunisia is known for its textiles and electronics industries. Morocco has a mix of manufacturing sectors such as automotive, phosphorus fertilizers, and services like aerospace and tourism. Algeria's economy includes vibrant hydrocarbons, LNG, petrochemicals, and food processing sectors. While resources like oil and gas are important to Algeria and Libya, these countries are less singularly dependent on just one sector. On the other hand, many sub-Saharan African economies still rely heavily on just a few commodities, like oil and gas in Nigeria, copper in Zambia, or cocoa and gold in Ghana, which makes them pretty vulnerable to international commodity price shocks. Furthermore, the manufacturing sectors are generally smaller and less competitive internationally. Formal service sectors are often less developed outside of the major hubs. So, what are the imperatives for sub-Saharan African countries to accelerate their economic development and help them narrow the gap with the Maghreb economies? First, invest in technical and vocational training that's fully aligned with industry needs, especially in sectors like agritech, industrial automation and robotics, etc. Second, infrastructure development is a cornerstone for economic progress. Invest in modern transport and energy infrastructure, develop efficient ports, expand rail and road connectivity across borders, and strengthen the electricity grids to efficiently power industries. Third, diversify the economy and accelerate industrialization. Reduce dependence on raw commodity exports. Add value locally. Establish industrial clusters, industrial parks, and special economic zones for domestic production. Develop agro-processing and light manufacturing sectors that are suited to local demand as well as regional markets to drive exports. Adopt long-term consistent economic development frameworks to reduce the risks that come with policy reversals and regulatory changes. Fourth, improve the quality of governance and minimize conflicts. This is foundational for long-term economic development. Political stability and good governance attract both domestic and foreign investments. Create an environment where businesses and individuals can truly thrive. This is particularly crucial for sub-Saharan African countries, but it's also important across the entire continent. In summary, the economic disparity between the Maghreb and Sub-Saharan Africa is driven largely by historical trade integration, infrastructure quality, human capital development levels, industrial development, and economic diversification. It is noteworthy that Maghreb nations, while ahead of Sub-Saharan African nations, also face their own challenges, especially youth unemployment and political transition issues. The economic divide is non-permanent. Closing or at least narrowing the gap will require Sub-Saharan African nations to accelerate their own economic development. By investing strategically in targeted infrastructure, agricultural, technological, and industrial development, Africa can forge a more unified and prosperous economic future for all its people. Thanks for watching.